Joining us right now is Cowen Managing Director in Retail and Luxury, Oliver Chen. He's also a Columbia Business School professor. And Oliver, this is the weird thing. You know, they're trying to order long in advance so your goods don't get caught up and you don't have anything to deliver. But I don't know what's worse, not having anything to sell or having a bunch of stuff that nobody wants.
Yeah, Becky, that's the epic challenge for retail, balancing supply and demand. And Walmart and Target really stocked up, but the consumer changed very quickly, as well as anniversarying stimulus. So these have all been risk factors. What's happening next is the consumer is really moving towards going out categories, such as fashion, dresses, luggage. And what's been weaker is big and bulky, patio, home, outdoor, as those have faced tougher compares. And it's just not what the consumer wants in this environment. Becky, I'd say the consumer's at a crossroads in terms of what is happening, a certain degree of bifurcation. What we're more concerned about is the lower end consumer, 50,000 household and lower. As we look at our Cowen survey and our conference, the spending intentions of the lower income households are lower, 70% lower. So that's something to watch. At the same time, on a positive side, unemployment is fairly low at 3.6%. So there are cross currents, and the consumer is generally behaving much more intentionally.
Yeah, I think it just depends on which side of that picture you're going to take. If you think it's the positive side, that the consumer is really positive right now, has a lot of money, you would look around at these things and say, okay, the sell-off has been too extreme, at least for some names. If you think a recession is coming, then maybe not. So which side do you come down on, Oliver?
Yeah, we are cautiously optimistic. I think unemployment is something I continue to watch. That being said, you always think about companies' valuations and the stock prices relative to expectations. And expectations have come in tremendously. And Walmart and Target are very strong omni-enabled business models with lots of scale. They just weren't able to turn the ships fast enough. We see a lot of bright spots, though. We like Ulta, we like beauty. We're also positive on luxury goods, such as LVMH, a global business model. And the U.S. luxury spending keeps on showing great momentum. So there are real nice opportunities here as well.
Which of these that has plummeted at this point do you think is not worth kind of putting your toe into the water for?
Well, we're still cautious on the mall environment and apparel, and that cooler April left a lot of goods in terms of markdowns. So I would say we're watching a lot of the retailers focused on apparel. We are recommending Macy's in terms of the valuation and a longer term perspective. However, these discretionary categories in April, particularly with that cooler month, that will be a risk factor to watch, as well as the home exposure at April too, Becky.
Would you buy Dollar General or Costco ahead of this?
Costco we like. Costco is a very unique retailer, which is a membership model, a fixed margin model. It also had a very nice April in terms of top line. We like it for that reason, and the margins are relatively fixed, and they've done a great job managing costs. So we're bullish on Costco. We are.